Hello and welcome to the Market Outlook webinar. If you're watching the recorded version of this, it was held live on Wednesday, the 10th of August at 12:30 in the afternoon. My name is David Jones. This is a webinar I do every week in conjunction with Aondo Markets, and it's a look back at sort of what's happened over the last couple of days, but mainly a look forward as to where the opportunities may be in the days ahead in a mix of different markets, you know, currencies, indices and commodities, that sort of thing. While I'm chatting away, I'll just put that risk warning up so you can see that. So the webinar today should only run for about 30 minutes, but we'll have a look at quite a mix of markets. And I think it's an interesting couple of days potentially. I mean, last week on Thursday, we had the UK interest rate cut, and that sent the pound quite sharply lower. Then on Friday we had US non-farm payrolls, which were better than expected, which boosted the dollar on expectations of maybe the discussion that markets always have, when is the next US interest rate coming? So again, I think raising expectations that we may see a US rate earlier rather than sooner, and that put pressure, because the dollar's going up, put pressure on the likes of gold, the euro, the pound, all that sort of thing. But without further ado, let's get cracking. I'm going to start off with currencies today because I think that's where there could be some opportunities, but we will look at indices, FTSE, DAX, and the Dow as well. So we are going to have a look at everything today. So let me just flip my screen over. So we're using Aondo's trading platform. There it is, Trade Hub, and they've recently upgraded their charts in the last week. I like these charts. They're nice and clear. So what we're going to do, let's start off with pound against the dollar, because I do think this is an interesting one, based on really what's happened the last couple of days. But just to talk through what's been going on. You know, we had seen. So this is an hourly chart you're looking at here. So an hourly chart, pound against the dollar exchange rate. So we had seen sort of during the second half of July and a run up to the interest rate decision last week, we had seen the pound gaining ground, and I'm taking my son to the US in a week and a half's time, so I was hoping we were going to see a bit more gains, but that got put the mockers on when we had the interest rate cut from the Bank of England, which was widely expected. You know, the market was expecting a 0.25% cut. The pound against the dollar moved, I think, 110 points in less than a minute. So we saw a big old move, and then something of stability the next day. Of course, this is Friday that we're seeing here, and then Friday, payrolls come out much better than expected. US employment numbers, the US economy, on the face of it, looked better than maybe some were expecting. And this, of course, was a week after, just a week after, we'd had those really weaker than expected US GDP numbers. So I was speculating that maybe we'd see this level hold, the one that it held for 2 weeks in July at 130.70. Yeah, that sort of level, isn't it? Around about there. But it sent it crashing through, a bit of a recovery into Friday's close, but a weak day yesterday, drifting off. It was a quite quiet day, so a quiet couple of days, drifting off towards sort of 129.70. But I think it's been interesting what's happened since. You know, my background's technical analysis, big fan of trading with the charts, but also quite a realistic technical analyst. You know, I'm not really a fan of Elliott wave and 1,000,001 different indicators and all that sort of stuff. I'm more a fan of, well, what's the price actually doing? So let's just zoom in. So what we're looking at here, so this big move, that's an hourly candle, that's Friday's move. No, it's not, that's the interest rate move, sorry. Then that's the payrolls move. So the market's drifting lower, drifting lower. This is yesterday, but overnight we have seen quite a recovery, and for me, what's telling here, I think I put it on Twitter earlier this morning, what's telling here is the fact that the moves today have taken out the highs from yesterday. So I'm a big fan, again, of looking at previous days' highs and lows. You know, so coming into yesterday, what was the high? The high was at midnight, really, yesterday, and then the market just moved lower. So we're at a high, you know, around about, what, 30.50, but the market's pushed a lot higher, and we're trading at sort of 30.80, not a million miles off the highs for the day. Also, whilst I'm not a massive fan of 1,000,001 different indicators, I do have on charts the RSI, a relative strength index. So this is a pretty well established, probably one of the first technical indicators dating back from the 70s, and it just looks at, how fast is the price. If the price is going up, is the price going up at the same sort of rate it might have been going up a couple of days ago? So it's relative strength. So it's how is the price changing relative to its own recent performance. And the sort of thing I look for is divergences. You get bullish and bearish divergence, and bearish divergence, it's not a brilliant textbook example, but it's this sort of thing back here, back on the 2nd of August. The market, pound against the dollar, pushes to a high, and the RSI is very overbought, as you'd expect. Market sells off, pushes briefly, nudges out to a fresh high, but the RSI, look, it's down here. That's known as bearish divergence. So that can be a suggestion that this high might be the high for a while. It's the market running out of steam. That one did work. And what we had yesterday was this idea of bullish divergence. Let me try and draw a line in here. So we had all yesterday, the market was like moving lower all yesterday. And there we go. So lower, lower, lower. But our RSI, you can see, was trending higher. So this is known as bullish divergence. So it can be a suggestion that maybe the trend you're following is running out of steam. So for me, it's moved higher, which is positive. It's taken out the previous day's highs, which is another positive, but I haven't bought it. It's because for me, the risk reward isn't right. And today is just the first day of it moving higher. So for me, the opportunity will be, because of my sort of somewhat conservative approach, if we get a pullback later on today or tomorrow, back to, I don't know, maybe, sort of the 30, 40 sort of area, these sort of areas. But I think it's an interesting one to watch, pound against the dollar, after getting clobbered and coming off, something like 400 points since those sort of pre-interest rate decision highs. Could we see something of a recovery over the next few days? So we'll see what happens. I think that's an interesting one to watch. Euro dollar as well, it's a similar sort of setup. I've been bullish on euro dollar all this year, and I think for me, it's a similar one, euro dollar, where again, it really has sort of got ahead of itself, euro dollar. We saw those big moves towards the end of July. The market came off, and I was waiting for an opportunity to try and buy back in, but to be honest, this moved a bit quick for me. But if we zoom in onto the move after the payrolls, so this was the payrolls on Friday, those US unemployment numbers, dollar strength, so euro gets clobbered, market stabilized, and this the first sign of the positive, was probably the market on Monday holding above those previous lows, those payrolls lows. I think they're always good levels to watch those. If you get a sharp move in reaction to some market event, whether it's payrolls or Mark Carney saying something or interest rates coming off, it's always interesting to see how the market reacts if it does push back. But so that's the euro pushing higher, and we've just carried on higher. Yesterday it broke the previous day's high, so it's done it a day earlier than the pound against the dollar. And today we are almost, back up to where we were for the highs from last week. So for me, I've missed the boat a bit really on the euro. But if we got, something of a sell-off over the last couple of days, it looks like something of a buying opportunity. Let's take a look on the dailies, and that's the bigger picture for euro dollar. So for me, last week it did push out to its best levels since the Brexit vote. And it sold off, but as we all know, markets don't move in a straight line. So that sell was an opportunity to buy in. So personally, my medium-term target for the euro, I don't think it's ridiculous to see it back at the pre-Brexit levels and maybe up at April levels. Assuming this spiky low post-Brexit, the referendum holds. So I would be inclined to be a buyer of euro dollar on weakness. We've got one more sort of dollar weakness story. Then we'll have a look at some that aren't. So let's take a look at gold. So I mentioned I've been in this gold trade forever, but I came out of it last week, and I've missed the opportunity to get back in. So I was in I've been in since 13.25 on the gold trade. So and it had gone nowhere for weeks and weeks and weeks, and then finally, I think, I don't know, have I broken it? Finally, last week started moving, and I think I've clicked the wrong thing here. Let's flick it on 30-minute. There we go. There we go. It finally started moving, so I did get out. I came out in the end. I think was it 13.68, something like that? No, that's too high. No, it was on this sell-off pre-payrolls, maybe 13.62. Price, but if you look at the chart for gold, there are still so many big levels. Now, these levels up here for gold are the highs for the multi-year highs. So the highs for the year and then multi-year highs. So for me, any weakness in the price of gold back to a sensible level of support looks like a buying opportunity. And the level I was watching, and again, like the euro, it's moved a little bit too quick for me, but maybe we'll get another bite of the cherry. But the level I was watching, first of all, was sort of these spiky lows down here on the way up from the end of July, sort of the 1330 level. And after the payrolls, it sold off, it drifted lower into Monday, held these previous lows. Yesterday, I've talked about this before, about if you're a really short-term trader, the importance of looking at the previous day's high and low. Held again yesterday, and then overnight, someone's really put a rocket under the price of gold. So I've missed out on this a little bit. But again, if it's sold off the next couple of days back to 1340-ish, it looks like a buying opportunity for me with a first stop under this sort of 1330, 1328 level. So it's interesting, I think. The dollar has had a comeback on Friday thanks to the payrolls, but it looks like these markets are maybe clawing their way back again. Let's have a look at one that maybe there's an argument for dollar strength. I think a while back we looked at dollar yen because we were looking at the major trend in dollar yen, and undoubtedly the big trend in dollar yen is down. We were looking at what bit do we want on dollar yen? It's from September-ish last year, isn't it? So you can see the major trend in the dollar against the yen has been down. And I think we were watching this rally and looking for it to come out, run out of steam. It ran out of steam. But it's interesting what's happened. This is the daily chart still. We'll zoom into the hourlies in a minute. But it's interesting what's happened, I think. Let's try and get the old horizontal. We're seeing, these sort of 99 level here. And if we say that level there from July, sort of 100, how important this level has become. So dollar yen rallied up towards 107. It's sold off, but you see over the last week, we have seen a bit of buying come in ahead of what had been a big level over the past 6 weeks or so. So even though it is definitely against that major trend. If you wanted to be a buyer of the dollar, then maybe dollar yen looks like an interesting one. You see, I had quite a run over the last couple of days off that level, off these sort of low 100s, and it's coming back again. So for me, that's an interesting one to watch, maybe for the rest of today and tomorrow, to see, all right, if we drift back to these lows from the end of last week, do we see some strength coming in? So there's maybe an opportunity for a shorter term trade off the hourlies. So we'll see what happens. What's driving the weakening of the dollar? Since chatting, the pound has moved to 130.87. Now, has it? I don't know. I didn't see anything major due out today. There's a bit of US stuff out at 130 today, but I haven't seen anything major due out, so I'm not quite sure what's pushing it. I mean, we did see that massive dollar strength off the back of the payrolls. I think the reaction this week is as a result of an overreaction on Friday, but what do I know? But let's see what happens. So that's dollar yen. I think it's interesting if you want to be a dollar buyer to see how it performs down at these sort of levels over the next couple of days. And the final currency let's look at euro sterling. So let's take the dollar out of the equation. Again, I think on euro sterling, it's been a bit of an odd one. Euro sterling. What are we going to look at? So we're going to go for hourlies. So we've seen. We have seen some pretty sharp moves. Hang on, have I frozen it again? We've seen some pretty sharp moves. There we go. And of course, there's the Brexit move. So there's the the 23rd of June, then the follow through on the 24th of June, and it has pushed higher, but it's been a little bit sort of undramatic since then. I think it's a hard one to call euro sterling. But again, based on the charts, you probably have to be a buyer. But I think it's going to be interesting to see what happens if it does get back up to the sort of 85.80, 8600 level, these previous highs from the beginning of July. So I'd be happier to be bullish on the euro against the dollar rather than euro against the pound. Let's see what happens. But I think there's a level there, I think, to watch in maybe the week ahead. But for me, there are more immediate opportunities like the pound, the dollar. That pound against the dollar is pushing out to highs for the day, isn't it? This pound against the dollar again. Let's see what happens back at these levels where the little payrolls bounce back up to here. But this is about 3,100. Let's see what happens if it gets up to these levels. But for me, the move we've seen today, if we saw a bit of weakness tomorrow, I'd definitely be inclined to be a buyer. One final one, dollar Canada. I thought this was an interesting one, so maybe watch this afternoon. Dollar Canada, or maybe it isn't. Maybe it's crashing through. There's a big level on the dollar against the Canadian dollar. Okay, so it's just on that level now. Look at this. These are it's a 1 week low. Dollar Canadian, if I can say it, dollar against the Canadian dollar, around about 130. That's really pushed. Something must have come out, mustn't it? Since we've been doing this, that's causing dollar weakness. Well spotted. But 130 had been a big level on the dollar against the Canadian dollar. Let's see what happens down here this afternoon. It definitely looks like it's losing it though, doesn't it? But that's one to watch, I think, immediately after the webinar. Look at that rocket move up on the payrolls, a little bit sideways, and quite a swift move lower. Let's see what happens with dollar against the Canadian dollar this afternoon. But it's not, that level's not holding at the moment, is it? Very oversold on the RSI. That's the problem, of course, with RSIs. They will, if you have a strong trend, they will give you a signal to go against the trend far too early. But let's see how that 130 level performs. But immediate ones for me, pound against the dollar, euro dollar, and gold, I think, are ones to watch. For me anyway, if we get a pullback over the next few days, what happens? Let's see. Right, other stuff. FTSE is. I'm hoping the FTSE's boring. Let's see. Okay, I do a bit of options trading, and I've got a trade on the FTSE to basically do nothing all day long. So if it ends the day at 68.30, I'll be happy. But if you look at the trend, you can't deny the trends in these markets, in stock markets. When we look at US markets in a minute, we saw, was that probably a fresh 12-month high, or nearly a 12-month high for the FTSE yesterday. Again, I put something on Twitter this morning, the importance of the previous day's high and low. Look at the FTSE. It was early this morning, 8 o'clock this morning, just when sort of the official open. The lows for yesterday, you can see sort of quite a spiky low ahead of 68.10. The FTSE this morning, again, the same sort of time, 8 o'clock this morning, traded down to about 68.18, and it rejected those levels pretty quickly. And we've done a similar thing again, I suppose, in the last 20 minutes or so. So 6,800 does seem to be propping up the FTSE 100 at the moment. On the upside, the highs from yesterday were 68.60, I think. But based on the trends, even though it has come a long way very quickly, you'd have to be a buyer. So for me, the first obvious level to watch today and yesterday's low ahead of 6,800. If we start to lose that, then maybe it will, panic a few people into selling out. But these stock markets are still, I think, incredibly strong. If you have a look at the Dow, similar sort of picture. So where's it gone? Wall Street. There we go. Similar one yesterday. Pushed out yesterday to a fresh high for this bit of the trend. It has been higher, I think, towards the end of July, but a fresh high for this bit of the trend. Briefly, it ended up being a quiet day yesterday, but you can see the momentum is still there. And what worked again yesterday, is the previous day's low. I think it's interesting what's happening here. What's happened overnight? If we look at what's the date today? It's the 10th, isn't it? So Monday's low in the Dow about 10 past 7 was about 18,500. Right, and the market ran up to 18,580 or something yesterday. It came back, but again, 7:30, 18,500-ish, 18,504 was the low, and rallied into the close. Right, in the overnight market, it has admittedly dipped below this 18.5 level, but for me, for today, 18,500 is another one to watch. We have seen over the last couple of days, and actually going back to here, I suppose. Going back to last week, we've seen a little bit of buying ahead of 18.5. So the immediate short-term level for the Dow, I think, is 18,500. If we start to lose that, if we lost that this afternoon, it wouldn't surprise me to see a bit of a sell-off this afternoon. But again, we've got to keep an eye on the bigger picture here. One swallow doesn't make a summer, and all of that. We do still have quite a good trend here in the Dow. You can see that 18.5 level, how it's performed. That was the payroll surge, so maybe we'll see a bit of a drift back to 18,350 if 18.5 breaks. But I think that's a big important level to watch this afternoon. It has been a bit of a quiet week for stock markets, though. It's not surprising, I don't think. This sort of what's it? Time of year. That's what I was trying to say. The interesting stock market, I mean, they're all interesting, but the DAX is an interesting one. So the German, where is it? The German 30, because it's broken a big level this week. The other stock markets had managed to break big levels before, but look at the DAX, right? So this is a daily chart we're looking at here. So I think this is another one to maybe keep an eye on in the days ahead. So it's currently trading at what 10,669, the DAX. And you can see how it has struggled in the past, with these previous highs, around about 10,000, what is it, 10,600 mark, that sort of level, if that makes sense. Let me draw my line on. So these, you can see 10,560. What a barrier that had been there. Then again, sort of pre-EU ref. But we've broken through, and to most people, a breakout, normally a positive thing for stock market. So I think the DAX is an interesting one to watch over the next couple of days. It was only yesterday it broke it. There you go. So we had to move through it yesterday. So is it going to continue to hold on? But again, like the FTSE, like the Dow, you can't argue with the strength of these stock markets at the moment. So for me, any weakness on the DAX looks like a buying opportunity. Let's have a quick look at maybe some of the levels to keep an eye on. That's our DAX. We've got a really quite a nice trend in the DAX over the last 7 days or so. Great trend, chugging along here. If we did pull back, then obviously this is one zone to look at, isn't it? Previous support over a couple of days here. Let's see what happens down at these sort of levels. But stock market's still bullish, even though they're fairly quiet. 6,800 level to watch on the FTSE. 18,500, the level to watch on the Dow, and the DAX is particularly interesting because it has broken this big level up here. So we'll see. But I think maybe the more interesting markets for those of us of a screen watching persuasion are, I think, the currencies. Maybe the next couple of days, pound against the dollar, the price of gold, and also what's the other one? Euro dollar. But that has that must have moved a bit higher as well, mustn't it? Let's see. Yeah, it's pushing higher, so it's back. It's back to where it was about a week ago now, euro dollar. So it'd be really handy if we had a bit of euro pressure over the next couple of days to buy in with a stop beyond here. But I am feeling that maybe I've missed the boat. But looking at the RSI, it is overbought, which again is not surprising. It's been overbought since back here. Let's see what happens the next couple of days. Oh, someone's saying that are there any other oscillators you use? I really don't. And I'm not a massive fan of the RSI, to be honest. I put it on today because I thought it was interesting what happened with the pound yesterday. I think one of the problems we all have, I definitely had, in the beginning, and I studied as a technical analyst in 1995, and I started trading off charts back then. And I think, like a lot of people, you're trying to find the perfect system. And I had so many indicators on my charts, RSIs, stochastics, MACDs, moving averages, that you do end up, not being able to see the wood for the trees. So that's why most of what I talk about now is what's the price doing, and where are the big levels, what's the trend, where can my stop go? So I'm not saying the indicators are useless, but I think for a lot of people, they end up focused on what the indicators are doing and not focused on what the market is doing. If you were looking at the RSI this morning, early hours this morning, you'd be selling the euro, and the euro is about 50 points higher than it was this morning. And if you're looking at the chart, there's no way you'd be selling that this morning because it's broken through yesterday's high, it's broken through the previous day's high, and it's really motoring. So I think it's trying to strike a balance. So for me, the price always trumps what the RSI is doing. So I think RSIs should be complementary, rather than letting you completely decide whether you're going to buy or sell. So I hope that helps. But I do like the RSI for for divergences and that sort of stuff. But we'll see what happens over the next few days. And I think that's it really. And what else is happening? Let's have a quick look, see where the pound against the dollar is trading now. Let me have a quick look at my FTSE trades. Remember, I want it just boring, please. Boring FTSE would do me very nicely. That's okay. For the chops around here, we'll see what happens. But it's interesting, again, what happened with the FTSE today. Going back to this, the big levels. You know, it did sort of rally quite hard from 9 till 9:30ish or 10 o'clock, and once again it stopped well short of the high from yesterday. So that was another thing that made me think maybe we'll just have a general chop day today. We'll see what happens, but we'll wrap things up there. I do this every Wednesday, so next Wednesday at 12:30 we'll have a look again at what's going on. There'll be a recording available if you want to look at certain bits again. But if you have any questions, you can drop me an email. So the reason I'm working with Aondo, I'm doing some stuff with Aondo on social trading, you know, where you can follow other traders. And I think it's interesting. I think it's quite, you know, I've got a couple of accounts following other traders as well. And I think it's quite complementary to everything else that we do. Oh, someone's asked for oil. Let me have a look. I think I'll flip back in a second and have a look at the oil price for you. I think it's been a bit sort of chopped last couple of days. But to find out more about what I'm doing with social trading, go to tradeafter.com, and that's my website, and there's a few bits on there that I've written, and I'll be doing sort of more specific specialist webinars once the summer's out of the way. I'll do stuff on sort of trading strategies, but if you have any questions, drop me an email, and it's david@tradeafter.com. Let's have a look at oil. I don't know if I've got the wrong contract loaded up still, because I couldn't get much data the other week, so I had a bit of an issue with it, and I think I might have the same issue again here. I have. Drop me an email because I've got another chart for oil, but I think it looked like it was recovering a bit, wasn't it, over the last week? But it looks like it's stalled again. So I think it's definitely not as weak as it was. It looked like it's broken up that downtrend. So I think maybe, you know, chop around $42 is the best we can expect. But drop me an email on that email address, and I'll do something a bit more detailed than just guessing what it was. Okay, that's it for this week. I hope you enjoy the next week's trading and it's profitable for you. Keep an eye, I think, on those dollar cross currencies. Let's see what happens over the next few days, and we'll do it all again next week. Thanks very much.